Right.
All right, so let's talk about learning angel investing. Got to start at the beginning, and the beginning is what on earth is an angel investor? What do we mean by that? And the definition is rather simple. So anybody who is investing their own money in a startup is an angel investor. The distinction that we make for startup investors is those that are investing their own money are angels, those who are investing other people's money are venture capitalists. Venture capital funds come in lots of different sizes. But the key piece is that it's your own money at risk, therefore you're going to make decisions that are slightly different than the fund managers. And anybody can do this within reason. In the countries we're talking to outside the US, anybody can do this who has the money to lose or the money to make. And so how do you learn how to do it? And that's where it gets tricky. So the most common way to learn angel investing is to learn from angel investors, to learn from others who have done it before. And it's usually learned in a group. It's usually not learned master apprentice. It's usually not learned by just picking it up on the street. It's usually learned by joining some organization that angels have formed in order to make investments. And when you join one of those groups, there's usually some angels around who have done it before. And you learn by watching what they do and listening what they do and asking questions to them. But what we're going to propose here that works better is an angel accelerator. We'll be using the terms angel accelerator and angel conference a lot today, and they're just considering them the same thing for now. So the reason why angel investing is a group activity, something you need to do in groups, is that you need to learn it by doing it. That you can't learn angel investing by just reading a book about angel investing. You actually have to go out and make investments. And the reason why it's really important to do it within a group is because it's a group activity. Because the first thing you need to do to figure out whether or not you need to make an investment is generally what we call due diligence. You have to understand what the company is who's asking for money. You need to understand who they are, what they're doing, what their market is. And the bigger the group you have that is helping do the due diligence, the more information you get. Because everyone who's an angel has different experiences. And the combined experience is much more powerful than any one person. But it's also a group activity because the money that startup is asking for is usually, almost always, more than any one person has or any one person wants to put at risk. And so in order to get enough money together to invest in a startup, you need a group of investors. And it's easiest if that group of investors already know each other and already trust each other and already trust their due diligence so that they can simply write a bunch of checks, fund the company, and let it go off on its job, as opposed to they've provided half the money the company needs, and now there's the need to go find yet more angels.